use variation with the prices. So that is, we use different type of price. Okay, buy when the change in the trend line is up, sell short when the change in the trend line is up. This is one of the best variation you would see. Okay, meaning that if I say we are actually here reacting. If you would have seen in previous chapters, money is made by reacting on the market, not by anticipating it. So actually, this is the variation where you would learn that we are reacting. Buy when the change in the trend line is up, sell short when the change in the trend line is down. Let's see what it is. Buy when the change in trend line is up. Just a sec. Um, Vignesh was out. Oh, okay. Anyway, so this is one of the most important method on how signals can be generated. So here we are actually looking at when the trend line is changing, when my moving average, the direction of the moving average is up. So over here, if you see right here, my direction changed. So somewhere here, you were having a buy. Okay. So we are now going to react to just the change in trend. Now the number of signals, okay, if we were actually reacting to price crossing above below the moving average, you would have more than few thousand, or maybe if not thousand, at least hundreds of signals. Okay, in this entire period from July to July. Okay, almost 2 to 3 years period. Okay. Now, second variation was I was using close. Then this hundreds would have come down to few hundred. Okay. So for example, this was 400 signal. Now I'm just having 100 signals. Now, third variation said we can change price in place of close. We can use high or low divided by 2, or we can use typical price and whatnot. We can use open and high or low. It can be any combination, but obviously signals. Now I'm just going to react to the change in moving average. So for example, on the visible period, I am long here. My trend is up. Here my trend is down. That's a sell. Again, it was up. Then it's a sell. Then it's a buy. Over here, it's a sell. It's a buy. Still buy. Okay, forget this one. Then over here, it's a sell. It's a buy. Over here, when you got a sell, you captured the entire move. Over here, you have a buy. There were some whipsaws over here, but then again, it is a buy. Then you finally sold off here. Then you again entered the trend. How many signals? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Maximum 16. Maximum 16 trades in 3 years. Getting the point over here? That is the basic nature of generating buy and sell. You need to identify, okay, that how to take a buy and sell, which is a profitable signal. Is it the cross? Is it the close? Is it the variation of closing price? Or is it the direction of the trend? Which one of them is better, you think? Bolo? I mean, you can speak. Which one of them is better?
The close one, maybe.
Sorry?
The close one, maybe.
The close one, as in where you are taking confirmation?
Yes.
Okay. Anyone else?
I think direction one.
Absolutely, it is direction. See, we are actually moving with the ultimately what is telling us the trend, the moving average. Okay, our main purpose of using a moving average or the trend line is to identify the trend. Now, if you wait for confirmation, that is good. That is, you are adding certain weight to confirmation. But if I know that I have a moving average and that is changing, that is the mean, and it is changing as per the trend is changing, then I would rather reflect or react as per the change in the trend, that is the moving average. So rather than taking 400 or hundreds of trades, I am comfortable with these 15 trades, as simple as that. And it is using just one moving average, remember, just one. It's not even taking 50 or 20 or 50 or 100 or 50 or 200, right? It is just one moving average which is giving you 15 signals, and you can judge by yourself that you might have captured some good amount of money over in this if you worked just by reacting to the trend. So that is how you generate signals, and that is the basic nature of buy and sell signals. So this is explained now. The main difference between using the price penetration or the trend line to generate signals is that the trend line produces fewer trading signals, and those signals are delayed. Now we know that yes, if I'm using just the direction of the moving average, obviously that I will have a fewer trades. Yes, we have seen rather than hundreds, we just had 15, 16 trades in 3 years. And those signals are delayed. Absolutely. Moving average is a lagging indicator. Okay. One thing is over here that what is profit factor? Okay. And profit factor is nothing but gross profit divided by gross loss. And it is basically when we are comparing various ways of signals, you know, you can take these ideas like 1, 2, 3, and 4. You can take these 4 ideas, you can see on them, you can, it's a simple mathematics, you can take it on an Excel and calculate how many buy and sell signal are there, what is the profit. So you can take gross profit, gross loss. And how Perry Kaufman studied is using the trend line signals is always better. Even Perry Kaufman said that if you are using the trend line method, that is the change in the direction of the trend line, your moving average, that is a better way to generate buy and sell signal. And such as Nifty, which is a secular bull trend or just 20, 25 years old, it is not going to work. You want to look at different asset classes, different markets. I mean, you can go to commodities, you can go to forex, you can go to, if you are using for equity, you can go to US equities market and see something which has a sizable history, you know. So you need to compare a wide range of diverse markets if you are comparing your buy and sell signals and their usability. For faster trading, the lag in the trend line is too much of a burden to overcome, and the price penetration is better. Of course, as Dharmin said, that he will use close. So if you are looking for trading which is faster in nature and which reacts quickly, so you would need price penetration, which is better. Price penetration as in based on close.
Close. Yes.
Everyone understood this one?
Yes, sir.
Okay. Profile of a SMA, simple moving average. We can generalize the trend following profile as, you know, there is a discussion in the chapter, and Perry Kaufman used Nasdaq with a 40-day moving average. Okay, so he studied that and he shared his insights, and it's quite practical in nature that he also gave out a report which was like based on number of signals, how much was the profit factor and everything. So he was trying to generalize, and what generalized analysis of trend following profile is as the percentage of profitable trades is low, often less than 30%. Okay, so if you are using a simple moving average system, you must understand that you will have profitable trades less than 30, maximum 40. That is what the range Perry Kaufman had given for a trend following system. Okay, and that too using a moving average. The average winning trade must be significantly larger than the average losing trade. Actually, given only 30% profitable trade, the ratio must be greater than 100 is to 30, that is 10 is to 3 to be profitable. Okay, so obviously if you are working with 30% accuracy, accuracy is in terms of profitability, you need a very, very good risk reward. So it means that whatever the buy signal you are generating, okay, whenever there is a buy signal or which is coming in, signal which is coming in the system, it is capturing a trend. That one needs to make sure that it is capturing a trend. Otherwise, if you are just using a moving average and taking plain signals, then it might be a problem. So you'll have to be creative in that. This is actually the practical aspect. But generally, we have seen in trend following, you have 30% accuracy, so your risk reward, I mean reward risk, should be much higher. Okay. The average winning trades are held much longer than losses. Obviously, suppose if you are taking a trades and you are having losing trades that are there in the market for, like, say for example, average period, holding period, or average bar, which your system is taking losing trades in account is say 4-5 bars or 4-5 days. Okay, or say 4-5 weeks if it's a trend following. So you're holding your losing trades for, like, say 4-5 days, then obviously your winning trades should hold almost thrice of this. So it has to be like 10 to 20 days. I'm talking this in a very short term way, but if it's a trend following system, these things can be in weeks. Okay, these are not in days. So these things are in weeks. So your winning trade should be held much longer. Why? Because it's a trend following system. If you are holding your winning trade as the same as your losing trade, then are you justifying the trend following system? No, obviously. Why? Because your winning trade you're holding for, like, say 4-5 weeks, and your losing trades are also held for 4-5 weeks. Then what is the meaning of trend following? That means you are not capturing a trend, firstly. Okay, and you are getting out of the market even if the trend is starting out, right? So your winning trades should be held much longer than your losses. There is a high frequency of losing trades, therefore there are also sequences of losing trades. Okay, for example, if we see, we got some we did MA cross over strategy. Let's see this system, right? Look at the max drawdown percent profitable. This is 47.89. So I believe this can be much lower than that. So this is how your profile is of losing trades and profitable trades. This is 47.89%. And if I come down to, say for example, hourly time frame, you see the system is a loss making system because it's not actually capturing a trend on a lower time frame. You move to a higher time frame, you see it is still a loss making system. So it's not actually capturing a trend, right? So there are variations, there are things which you need to understand before making system, and understanding thinking that trend following is easy. It's actually the toughest system, because it takes a lot of mental strength as well. And then obviously when you have that one or two winning trades after few streaks of losing trades, that one or two trades are going to give you good amount of profit. Actually, there is a saying, na, your most of the profits out of all the profitable trades, your most of the profits would come out of that 10 or 20% of the trades. Remaining 80% would have had some average gain. But those trades which actually capture the fat tails are the trades which is going to give a huge impact to your trading system. Okay, bands and channel. Then he also actually defined how to use bands, how to use channels. We use Bollinger bands and things like that, but how do we use them? What is the basic nature of using them?
Yes, please.
Yes, you can. It's a two-way communication. Moving average. I'm gonna take 3 moving averages. I'm gonna give. This is actually quite a famous strategy. Say for example, not 20. I'm gonna take 7, and my source would be high. Okay, this is, let's keep it blue. Okay, and keep this as well blue, and this will also take it as 7, and we'll take low over here. Okay, so now I have two moving averages, which is basically working as moving average based on high and low of 7 days. Okay, that's what it is said. Instead of applying the end day moving average to the closing price, what I have done is I have applied separately to the high and low. So one of them is high. Let's keep a bit different color so that you are able to visually look at it. I'll keep it red, right? Red and blue. Red is moving average based on highs. Blue is moving average based on lows. Okay. Long positions are entered when today's high crosses the average of the highs, right? So for example, my long position would be here. Got it? When today's high, that's what it is saying, that today's high crosses the average of the highs. So that is my long position. And my short position, if is lows crosses below the lows. So over here I'm short, over here I'm long, short, long, still long, still long, still long, short, short, short. Over here there was, if this was based on crossing, if this was based on say closing prices, okay, then my long would be on this candle, my short would be on, oh sorry, exit would be somewhere here, or my short would be here, then my exit would be here. I'm still long, then I'm short over here, then I am long over this price. So this is how this particular system or this particular idea work. Understood?
So can you please explain again?
कौन बोल रहा है, धार्मिन?
Yes, sir.
Okay, just a second. Let me first take a reference of yes. So what it is saying is, rather than using what we used previously is when prices were crossing the moving average, okay, or prices were closing above or closing below the moving average, or even there was a change in the moving average. What we are doing here is we are creating bands. So rather than be applying a moving average based on closing prices, what I've done here is I have taken one moving average which is based on high of 7 days, okay. Then I'm taking another moving average which is based on low of 7 days. So you see this particular red line, this is based on highs, as highs of last 7 days, okay. So it is forming up, and this blue line is nothing but blue line based on lows of 7 days, average lows of 7 days, okay. So as simple as that. So what he is saying, if prices are crossing above the higher band, okay, you are taking a buy trade. If it is crossing below the lower band, you are taking a short position. Got it?
Okay. So it's just about crossing, not about the closing.
It is like long positions entered when today high crosses. You can take closing. That's what I said. We have seen we can take various variations. We can take variations as one. पिछली साइड में अपन ने क्या पढ़ा था? What we read here is we can use crossing of the prices
and close also.
We can use closing, we can use typical price, and we can use the change in the direction of the trend line, right? That is the way we can use moving averages, right? Now over here in this bands and channels, he is just suggesting you can enter when today's high crosses the average of the high prices, okay? I can take 2% and 2% below it. Similar to way Bollinger band is plotted, I can plot it on the moving average. Now then again, how you want to take buy or sell signals, we have studied this. Cross, close, based on typical price or some price, or based on the direction of the band. Simple as that. Okay? Understood?
Yes, sir.
The band can be more sensitive to the change if the current point is used to calculate the band instead of the moving average trend line. Current price is calculated. Okay, the band can be more sensitive to change if the current price is used to calculate the band. Okay, so if you want to make it sensitive, what we were doing is we were taking certain percentage of price or say moving average from the trend line. We can make it more sensitive. Okay,